Your life, ladies and gentlemen, you are once again welcome to the Kingdoms podcast. And today I have with me a very, very special guest, a person who is very dear to my heart. I have run out of adjectives to describe or to qualify how much I place premium on this man. Please welcome with me the futurist, Brett King. How are you, sir?
I'm very good. I'm very good. Thanks for having me on. Yeah, I appreciate the opportunity.
Oh wow. I should be the one saying I appreciate the opportunity. There's a lot of bias, from my own end, being a finance guy. They say, and of course, I am a very, very big enthusiast of MMA, that's mixed martial arts. There's something they say in MMA, they say work hard until your idols become your rival. But of course, in the world
Mm,
of podcasting, I would say work hard until your idols become your guests.
your guest. Yeah, I mean, look, I've been doing a podcast for 12 years now, Breaking Banks, and then I have the Futurist, which has been going for the last 4 years. And the caliber of guests I'm getting now, particularly for the futurists, like just insane. And it's one of those things where you start off slow, but if you got to ask. I just booked a very famous astronaut,
Wow.
on the show for next week, and some of the I've had New York Times bestselling authors, many of them, and it's true. You just got to aim high, you know, and just keep working on it every day.
Exactly, for me, I started that's 1 year and would I say 3 months now, November 2023. And the way I've been aiming high, reaching out to high profile guests, some people look at me and say, "Oh wow, who do you think you are?" Who do you think you are? But the thing
Just,
is, you just
just
have to aim high.
a person with the curiosity to ask the right
Mm.
questions. That's all you have to say.
Exactly. And of course, I'm really grateful for the opportunity you have granted. And I like to say, when somebody shares their time with you, they are also sharing their life with you because the SI unit for measuring life is time, right? And of course, thank you very much for sharing your time and of course your life with me today, and of course my audience. That is very, very much appreciated. Okay, so you are a person who has transformed, would I say, the world through the fintech space. So transformation comes with a lot of mindset shift because I believe in the growth mindset, whereas a lot of people do not grow because they have a fixed mindset. You are regarded as one of the most influential voices in the financial services sector globally. And for those who may not know you, how do you introduce yourself in a tweet length response?
I'm top
ABC.
10, top 10 global futurist, best-selling author, host of Breaking Banks and the Futurists, and the founders of the world's first mobile digital bank, Moven. That's a good start, right?
Oh, wow. I like that. For me, I like to say the ABC of communication is be accurate, be brief, and be concise. And of course, you hit the nail on the head. But if you were to
The other
describe,
thing that I could say, that gets announced a lot when because I'm on the speaking circuit a lot. So, the other thing that tends to get focused on is the work I did with the Obama administration. And, President Xi had my book on his bookshelf in his 2018 national address, and people sort of focus on that I've advised, the US and Chinese administrations. But, for me, I'm a technologist and a storyteller, and I'm interested in the future, and that's sort of the intersection of my career the last couple of decades, at least.
mm, you have a lot of feathers in your heart. And of course, it's difficult describing you. But if you were to describe your career in one sentence, what would it be?
Ugh, well, see, it's not a career. I guess that's the point. Is I've had multiple careers. I started as a coder. Then my ability to communicate highly technical concepts to
Mm,
business people gave me the ability to be a technology translator, to help explain it. And then I started looking at the impact of emerging tech. And I was also always a little bit of a sci-fi, you had an interest in sci-fi. In fact, the first book I wrote was not a nonfiction business book. It was a science fiction novel, but it didn't get published. But that's sort of my background. So it sort of is logical, I guess, that I started dealing with technology in the future and emerging tech and emerging trends, and really embedded myself as a futurist over the years. Of course, highly specialized in banking a lot of that time, but I've also over the last 10 years done a lot of work as a general futurist. My book Augmented Life in the Smart Lane, which came out in 2015. If you were to read it today, a lot of what you read in that book from 10 years ago is describing the world of today. But, I wrote it 10 years ago. So, that's what qualifies me as a futurist, I guess. It's not just understanding technology cycles, but it's also understanding how human society adapts and so forth. So I guess a future-focused technology philosopher. How's that?
Hmm. Interesting. But for me, I would describe your career as something. I'll describe it as adventurous, challenging, but rewarding. That's
Yeah, that
that's
works.
exactly how I'm going to describe it. Wow, you are like the Nostradamus of our time, the man that sees the future. And it's not like would I say the too long range future. You see the short term, you see the medium term, and of course
Yeah,
you
I guess
see the
I'm
long
working
term.
sort of from 5 years out to 30 years. Beyond that, it becomes a bit harder to ascertain. And even at sort of 25 and 30 years, so talking about like the 2050s, there's still
Mm,
there's still multiple potential timelines. So when you talk about the future, people talk about predicting the future, like Nostradamus, right? Actually, what futurists do is more what we call super forecasting. So it's long range forecasting. So it is based on a science, it's based on numbers, trend analysis, and so forth. So I'll give you an example. In 2012, I published a book, Branch Today, Gone Tomorrow. And in that, I predicted that by 2030, that in the United States, bank branches would be at half the level they were at their peak in 2008. Now, I was the only person in the United States banking industry that thought that would be the case. Now, when you look at those predictions I made in 2012, it's fairly obvious that, that is what's going to happen, that by 2030, the US will be at half their peak. So at the peak, it was about 98,000 branches in 2008, and they'll be at 50,000 or less by 2030. But that doesn't take rocket science to understand. You just have to understand technology cycles and the fact that you have a behavioral shift happening at sort of a grassroots level because of smartphone, right?
exactly.
And but yeah, there's going to be some variation in specific markets because regulation and customer behavior and things like that. So you have to sort of be able to entertain those elements as well.
I think that is actually very true. Case in point, I live in London, England, and the NatWest branch on my road has actually closed down. And
Well, this is actually interesting. The UK, the research that I put in my new book, which is called Branch Tomorrow, which comes out in May, indicates that the UK could be down to 2,000 branches across the United Kingdom sometime in the 2030s. That's a very, very low number. And there are social issues. I do get into that in the book. But here's the problem is that when you have people talk about bank branches as being social infrastructure, right? Infrastructure required to support society. But you can't have social infrastructure that's privately owned. Those two things aren't compatible. If you're not going to nationalize bank
now you delve
branches,
into the economics.
yeah, you can't depend on private corporations to run
Yeah, public
social
good.
infrastructure at a
Mm,
loss, because that's the key problem. The reason banks are closing branches is they're not making money anymore. They're not making money because people don't have to visit branches because they can do everything they need on their phone. Right. So but the older people that prefer branches, the problem is that most of them, particularly if they're pensioners, they're they're not high margin clients for the banks. So there's really not a proposition that they have economically for keeping that going. The US has some lag with that because it might sound unbelievable, but the US is behind Europe in banking today, and in fact, the US is probably 10 years behind China when it comes to things like mobile payments infrastructure today, because of the political structure, the lobbying group structure, and the fact that the banks have been able to keep competitors out using lobbying groups and paying off politicians, basically, which is a bad, ultimately is bad for the US because it slows down innovation. Same is happening with the energy sector and even with healthcare now in the US. But Europe has pushed forward with real-time payments, and of course you've got Revolut, Monzo, Starling, other players. Revolut now has 50 million customers. HSBC, a 160-year-old bank, has 39 million customers. So if you look at the top 50 fastest growing financial institutions in the world today, they're all digital. And they're digital because the way you scale, digital banks is through digital onboarding and digital acquisition. And this is why, branch economics don't work any longer. It's just far more efficient to run a banking business digitally than it is in the old way, which we've been doing for 500 years, right?
Exactly. I was having a conversation with the CEO of Oxari. They are into sustainability solutions, ESG. They rolled out a solution called Athena, and that software helps companies to extract digital data relating to ESG metrics, and of course uses AI to help companies with their reporting. And we talked about the generational wars when it comes to advancing technology, especially AI. You mentioned what's happening in the US, and I mentioned something about the Generation X and the baby boomers still having a strong hold on economic institutions and businesses, and they're able to fight off the technology savvy millennials like myself. I'm 32 years old, and the Gen Zs. The Gen Zs and the millennials are very much open to adopting and adapting AI and new technology.
Sure.
The Generation X and the baby boomers are not. So how do you see that generational war affecting the
I mean, I
landscape in
think
the
this is
US?
true of every major technology. We can go back to the steam engine, in the late 1700s, and the effect that had on early manufacturing. And the Luddites, which were so called because there was supposedly the leader of their movement was known as King Lud, Ned Ludd. Now we don't know if we
Thankfully
don't
not,
know.
thankfully not King Brett.
No. We don't know if Ned Ludd was a real person or a construct because the historical records are not great from back that period of time. But the Luddite movement would go into factories and destroy the steam-operated weaving looms because the textile industry and the agricultural industry were the two biggest industries at that time. And textiles was closely related to agriculture, of course. But the automation of those factories with steam-driven machines was a major disruption to society at that time. And there was a group of workers who were losing their jobs because of this, who would go in and physically destroy and burn down the factories. And the UK government had to deploy military to protect these factories at the time. So even if you go back a few hundred years, you see the same thing happening, that when technology disrupts industries like this, then the incumbents always resist that. But the number of industries or the number of businesses that have successfully been able to defend their business model against technology disruption, zero. Right? So the reality is you can say this is unfair. We don't want to change. We like things the way they were. And under zero circumstances, historically, are you going to be successful in halting technological progress? So this always amazes me that we go through these cycles every time. We're going through it with AI right now. For example, if you look at the core basis of artificial intelligence, From a capitalist perspective, AI is designed to eliminate human labor from the workforce. It's the greatest productivity tool we've ever given, entrepreneurs and business operators, because you'll be able to automate out humans. Now, of course, the defenders of capitalism are saying right now, yes, but every time we've created new technologies like this, like the steam engine or the Model T Ford production line or electricity or computers or whatever, for every job that's destroyed, we've created new jobs to replace them.
Exactly.
And that is an accurate statement, but we've never had a technology that can affect every industry, that can impact white collar workers and blue collar workers at the same time as we have with AI. So the level of disruption is going to be acute. So I don't know why we're not investing a lot more in planning for this disruption so that we can transition people's skills. You hear talk about universal basic income and things like this as a potential solution for that. But we need, in an ideal world, we would be planning and figuring out how society is going to transition into that highly automated state, as we would be for climate disruption on the planet. But we haven't prepared for that either, right? So humans have a problem with a quite short-term deterministic viewpoint of the world. So when you get, and also the behavioral constraints. So when you get Gen X and baby boomers looking at something like AI, they're like, well, we remember, when things were much better in the past. It's like, when we had infant mortality rates that were higher, when we didn't have cures for cancer and, all of these things. And it's sort of a romanticized view of the past that we get sort of stuck in because it's a comfort level. So sometimes technological change requires generational shift in terms of policy setting and investment structures. With AI, it's just far too compelling a tool set to limit its destructive value on the economy from a jobs perspective, unfortunately. It's just going to make so much money for people that use it that there's no reason to hold back from taking jobs away from humans and giving them to AI at this point.
So speaking of jobs, I think we can kick off with a quick fire game. I'll mention
Sure.
technology, and of course you tell me or you make a bold prediction about what its role is going to be in banking over the next 5 years.
Okay.
Okay, so let's start with blockchain.
So I like blockchain because it has the ability to decentralize networks, particularly in the area of smart contracts. I think blockchain-like mechanics will be necessary for large-scale AI agent-based marketplaces. But I do think it's going to be limited to that type of application and will be less impactful in the retail sector.
Okay, so how about AI-driven banking assistance?
Well, I think there's two industries that will be forever changed by AI, particularly. I mean, transportation and stuff, yeah, for sure. But AI-based healthcare and AI-based financial services will be completely transformed because there's really not any part of banking or financial services that won't be impacted by AI. So you can expect within a few years that if I needed to send you money, I just talk to my AI and say, send £50, right? And that's all I really have to do in the future. So when you talk about AI assistant, it's going to be not an AI assistant dedicated to banking. It's going to be your AI assistant dedicated to helping you in your life, but it is going to have the capability to help you move money and make financial decisions.
Well, you actually touched on health care, and that is something quite close to my heart. Are you able to touch on what you think the role of AI is going to be in that sector for the next
Sure.
couple of years?
Well, let me give you a simple illustration. In 5 years' time, if you say to your partner or your friend, you say, I'm not feeling well, I think I might go and see a doctor. One of the questions you'll get after you visit the doctor, did they use AI? And if you say no, then your friend will be like, are you crazy? You need to go see another doctor. Because we will have already come to the conclusion by then that the best doctors in the world use artificial intelligence.
That's happening already.
Yeah.
Wow. So how about biometric security?
That's interesting. I think we will have to take sort of a different view of security, particularly when we have AI agents acting on our behalf. So I think the view of privacy and security that we've had in the internet age, passwords and PIN numbers and all of that sort of stuff, I think that's going to fairly radically change. And we'll use sort of biometric signatures, which are a set of biometric information and behavioral information combined. And the AI agent will sort of represent that. But there's a closely related element to that, which is the sort of cryptography or encryption layer. And that's going to go through massive transformation because of quantum computing. So that's the other side of biometric security.
Haha, you actually read my mind because the next thing on my mind is actually quantum computing.
Okay, so why the big deal about quantum is within the next 5 years or so, we will have stable quantum computing platforms. These are 100,000 qubit quantum computers or greater. So this gives us the error correcting capability that we don't have on the current scale of qubits. Once you have that, then quantum computers will be able to break all of the existing RSA encryption. So this is what we use for 128-bit SSL on the internet. It's what we use for internet banking security. It's what we use for ATM security. It's what we use for military communications and so forth. And all of that disappears when quantum can break, current RSA encryption. So you need what we call quantum resilient or quantum proof encryption technologies. And that requires essentially that your technical stack is on the cloud linked to a quantum stack. So most traditional banks that are on premise will not be safe beyond, say, the early 20s unless they've migrated to the clouds. The new players, the Stripes, the Adyaans, the Revoluts, and so forth, they're already on the cloud. Their ability to plug in polymorphic quantum encryption algorithms and things like that into their stack is much simpler. So, but this could produce a sort of period of radical transparency, actually, because government secrets could be opened up, all sorts of things. It could be a very interesting time for human history.
You made me think about something. Cloud storage and cloud computing.
So this is a pretty interesting one because we assume that we're going to be using a lot more cloud compute. Think of it like electricity, that compute power will just be available on demand when and where you need it. But we're also going to have a distributed approach to that. Think about the fact that you will have a personal AI. It will be sitting on your device or in your personal cloud. You'll be able to use it at home. You'll be able to use it in your car. You'll be able to use it on your phone or smart glasses in a few years. And that tech may be more localized, but most certainly, we're going to be looking at, from an AI perspective, a lot more cloud-based compute. But at the same time, AI is going through these compression cycles right now. DeepSeek showed us that. So it may be that we may be able to get very efficient intelligence compression without requiring cloud infrastructure and having it on local devices. But that sort of remains to be seen. But I think edge computing is probably more of the style of cloud-based infrastructure that we'll be looking at rather than what we call traditional cloud-based data centers today.
Interesting stuff. Generative AI for personalized financial advice.
This is an interesting one because ChatGPT is not trained on financial data. So you can't ask ChatGPT or Claude or Gemini, these engines currently to give you financial advice. They just haven't, their training models have just not been exposed to the right data. And banks have not built large scale LLMs on transactional data right now because they're all worried about, competition and so forth. With a couple of exceptions. You have Nubank, who acquired Hyperleap last year. They have 100 million customers, so presumably they have enough data to produce their own stable LLM for generative finance. So there are going to be some standouts, on this. That is also true of the smart contracting technologies we're going to need for operating AI agents at scale. So I would be looking at the fintechs to lead this fight rather than traditional banks in terms of generative AI applied to the finance space. But in a few years, and I know you've come from the chartered accounting space, this is one of these areas where when it comes to financial advice, whether it's tax advice or budgeting or whatever, imagine being able to ask your phone, hey, let's say I'm going to call my AI assistant Alfred, like Batman, right? So, hey, Alfred, can I afford to go out for dinner with my friends on the weekend? Alfred's going to know the answer to that question as your personal AI because of generative finance. Or when you walk in a grocery store, your AI is going to say, hey, it looks like you don't have enough money to buy your groceries today. Here's some extra cash if you need that, or I can transfer some money out of your savings account. What would you like to do? That's sort of an example of sort of that contextual generative finance that we're likely to see. It's not going to be what banks think it is we're going to generate the best product offer for you at the right time. It's really not going to be like that. The beauty of generative AI in finance is it's going to be understanding your behavior for when you need the utility of the bank present in your life.
So you have actually entered into my garden, like I like to say. So talking about the chartered accountant space, I come from an audit background. So what do you see happening in the next couple of years in my industry?
Well, I think this is true of every industry where you have advisors with information asymmetry. So financial planners, chartered accountants, doctors, lawyers, et cetera, consultants, from the big four, big five. The reality is that the reason you go to a lawyer or you go to an accountant today is that they know more about the law or about accounting standards than you do. Right. But let's just take medical advice. This year, we will have about 1 million medical journals released on the world. So there's not a single doctor who could read 1 million medical journals in a year and absorb that information accurately, but an AI will be able to do that. So, and we also know from current diagnostics and things like that, AI is getting better at diagnosing than diagnosis than the average human doctor. In fact, this will be the year that they'll surpass doctors in almost every field in terms of diagnostics. So you will still need a doctor to interface with, but he's going to be using AI to do the diagnostics. And then over time, your personal AI is going to tell you when your biometrics are off, using sensors that are, in your body or whatever, or on your body. It will tell you when you need to go see a doctor. So your AI will be, you won't necessarily feel sick,
This is
but
too
your
done
AI will
already.
go, yeah, you need to go see a doctor because I'm seeing some troubling data in your blood work or something like that. And so think about the same thing happening in accounting or whatever, where you've got an AI assistant helping you manage your business, and then it will say, you need to go and speak to an accountant, and it will choose the accountant for you based on the problem set and based on your business's speciality. So, and then the accountant that you use will be saying, oh, well, I've got all the data and this is the solution and we need to do A, B, C, done. And it'll be much more efficient and more cost effective in that way. But think about this, that AI is going to have information asymmetry over humans. So there's not going to be a single human that will be as good as a human using an AI for accounting. There's not going to be a single doctor who will be able to perform better than a general doctor with an AI assistant. It's just that's not viable in the future. You're going to have to use AI to stay in the advisory space because of information asymmetry.
So, with the cost effectiveness and the increased efficiency from AI, definitely there will be, what I say, job losses, and of course, the requirement to use less humans. So, for humans who have actually built a career in this direction, and of course, built up massive expertise in this direction, what's your advice, in terms of trying to leverage on AI to
Yeah,
skill
it's
up
pretty simple.
or to pivot into something different?
First of all, I think there are two types of people in the world today. those that are using AI to enhance their career, try and, figure out where they could use AI to be better at their job, or where they could use AI to enhance their company. That's the first type of person. And the second type of person are those that are going to lose their job to the first type of person. Right. So that's the reality. You're either in AI or you're not in the game in the future. There's some people who don't want to hear that. And, I think we see that, we saw it when Facebook came out. We saw it when the internet came out. I ran an ISP many years ago in Australia in the mid-90s, an internet service provider. And I would be shopping around trying to help businesses get their first web page up. And I would tell you 99% of businesses I met with during those days said, no, we're never going to use the internet. And that's what's happening right now. Is like, I'm never going to really use AI, but that's in the space where things are moving so quickly in terms of technology displacement of human workers, people are going to be forced to sort of make that decision. Now, there is some good news on the other side of this, is that in 20 or 30 years time, when if I meet you at a bar or a restaurant or a conference or something, and I say, hey, what do you do? Your answer to that question is not going to be the work that puts food on the table, because that function of the economy will be done by AI. So housing costs, education, healthcare, food production will be largely autonomous, and as a result will be very low cost to the economy and provided as sort of the basic needs of humans. When you choose work to do in the future, it won't be work that you survive with. It'll be work that you're passionate about, work that provides you with meaning. And the biggest employer in the 20s for humanity will be climate mitigation, the largest industry on the planet. And we know that because the numbers in terms of economic loss from extreme weather events is on a J curve right now, exponentially increasing. So we expect that by the 2050s, somewhere between 20% and 50% of global GDP will be spent on climate mitigation, eco-refugees, and food scarcity resolution.
Interesting. Well said by the futurists, and we need to start to make preparations to adjust to the future trends. But I'm quite curious, like, what's the methodology for these predictions? I understand there are correlation, there are regression analysis, but how do you come up with these bold claims?
You're testing me now, right? No, it's fine.
There should always be a method to the madness.
No,
But
no.
of course, before we head to that, I understand you're Australian, and of course, I forgot to give you guys your flowers. Aussie, Aussie, Aussie.
Oi, oi, oi. Yeah, no, thank you. That's the Aussie war chant for sports, if you haven't heard it before. But no, coming back to your question in terms of the forecasting methodology, the main, it's two main fields of research. One is human behavior and psychology, ethnographic, sociology, those sort of aspects. And the second is just emerging tech trends, right? And how quickly we're likely to see that. But the emerging tech trends are being compressed because of AI. So AI will help us, and quantum will help us generate new technologies much faster in terms of R&D cycles that we've had. So you're going to get that compression in timeline there, where you're going to have technology advancement happening faster than ever before. And we also got massive compute power to throw at this. Think about the NVIDIA chips we're developing, and that's even before we get into Majorana or Willow chips, the quantum chips that Google and Microsoft have developed recently. So you're going to get this, you get the scaling laws that are happening in AI. We often refer to compute power increases by Moore's law, which shows us that about every 2 years, we get a doubling of compute power for the same cost. But with AI, it's happening at 10x over 2 years. So that's much faster compression. So AI is going to become much more powerful, much quicker than we're used to with technology advancement. So you have to factor all of those things in the technology cycle. But, we know, for example, the next big consumer tech will be smart glasses. Augmented reality smart glasses. This is computers you wear on your face.
Like what I have here.
Yeah. Using voice and gesture-based controls instead of using a keyboard or a mouse or multi-touch, and you'll be able to pop up a screen in your real-time vision and things like this. We'll have AirPods or headsets that are AI enabled. So if you're in a conversation in a noisy restaurant, you'll be able to filter out all of the noise and just hear the person you're speaking to. If they're speaking in another language, you'll be able to translate it in real time. We are very, very close to these types of technologies already today. So one is emerging tech trends, and the second is, well, how do people respond to technology changes? You've already, spoken about that because you talked about the Gen X and baby boomers' resistance to some of these things. But we know that resistance is there, but we also know that resistance is not effective on a long-term basis.
It's just
It can
delaying
slow
the
things down in the
inevitable.
short term. Yeah. So you just have to work out, well, how long does it take for that technology to have the breakthrough moment, where people sort of feel the need to adopt it or just get on board. And when you have technology unemployment that's being generated by these changes, it's sort of unavoidable that you have to deal with it, right?
Definitely. And of course, I think that's a good way to segue into the next thing I wanted to ask you about. That's augmented reality for customer experience.
So there's a bunch of different techs here that we could call augmented reality. So the first is vision. We talk about this as spatial computing as the broad categorization. VR and AR and mixed reality fit into this category of spatial computing. So, we really don't know how to develop truly spatial operating systems and things like that right now. If you look at Vision Pro or Android XR or these sort of technologies, we're still putting two-dimensional interfaces in the three-dimensional space. So you have smart glasses and we're putting a flat screen in front of you, as an example. I really think that that's all going to change and become a lot more contextual. I think you'll have a head-up display, sort of like a fighter pilot does, in a fighter jet today, where, essential information is coming at you contextually, and then you'll be able to call up an interface. You'll be able to watch a movie or, change your environment, do sort of a holodeck type environment like Star Trek if you want, in that space. But you also have augmented reality sound. So, we'll be manipulating sound, and the translation capabilities I gave is an example of that. And also, on the augmented reality side, we'll also be seeking to change your behavior. It will be trying, for example, if you have a longevity app in your tech stack that's designed to change your lifestyle to live longer, we may have augmented reality prompts and nudges throughout the day that sort of push you to change your behavior so that you're more likely to live longer, as an example. So AR, augmented reality, in that respect, is not just about the glasses, but certainly smart glasses will be the next major sort of compute platform. And the reason I say that with confidence is, if you look at computing since the 60s to today, two things hold true. One is that compute power gets massively improves over time.
Exponentially.
Moore's law, and that also computers get much easier to use over time. So what's the easiest form of computing power to use? It's something without a keyboard, without a mouse, without a screen, that is just with you every day that you can utilize. AI-based compute power is there. So AR fits, or augmented reality fits over the top of that from a compute development perspective, where you're basically making your computer wearable, and the only input you need to have for that computer is just going about your everyday life.
Speaking of sound, let's touch base on voice activated banking assistance.
So, I think, again, if you think about your personal AI assistant over time, probably the majority of your interaction with that AI will be voice-based. You may do text-based stuff. You may still use a smartphone and chat to the AI in text when you're in a meeting and you don't want to talk. But in 2050s, we may sub-vocalize. So this is an interesting text. If you had an implant for example, in your jaw, then what you could do is, or, a brain control interface, a chip in your brain like Neuralink, you could think the words and your AI could listen to them without you having to say them. So that's the ultimate integration of a voice-based assistant where you just think the words without having to say them. But in the short term, we already have conversational AI. If you look at some of the tech that's come out recently, of course, most people have experimented with ChatGPT, but there are better conversational models available now. The reality is that in terms of voice assistants or conversational AI, we're now at the point where we blew through the Turing test maybe 10 years ago. You won't be able to recognize an AI speaking to you within the next couple of years. You won't know, when you pick up a phone call, if that's an AI or a human. It'll be impossible for you to distinguish that unless there's some sort of, your phone tells you that this is an AI call that's coming in. So expect that you will have quite open dialogue with your personal AI quite extensively throughout your life, and it will just be integrated in. So when you hop in the car, and like we do today with Amazon Alexa or Siri or whatever, things like that, you'll have that conversation. It'll be much more highly personalized though. This AI voice assistant will be trained on your behavior, will understand your nuances, your needs and wants. And when it comes to financial services, it'll link with an AI agent for your financial services, being trained on your behavior, and it'll know, for example, what bank account you'd like to pay for certain activities, when you want to save money, what your financial objectives are, and it will be your sort of integrated money coach into your life as well. But that's not going to be, the voice assistant's not going to have all of those skills. There'll be different agents that the voice assistant will bring to bear for specific tasks. Like you'll have a travel AI agent that will know your preferences for airline travel and what hotels you like to stay in and what your budget is for those things, and will just be able to do that without your input over time, right?
Interesting stuff. I I would say you trespassed into my garden again because you talked about implants, and I do have an artificial tooth from a surgery from what do you call the surgery again? The wisdom tooth surgery.
Sure.
So I was like, okay, the futurist again. So you are meant to be the futurist, but why are you seeing the past?
I'm actually working on a dental AI startup right now, where we're putting a camera in an ultrasonic, electric toothbrush. So when you brush your teeth, the camera will take pictures of your teeth and it will tell you when you need to go to the dentist. And AI
So
will make a
did,
booking
did
for
your
you.
camera catch the implant that is here?
Exactly. Yeah.
No
So
way, no way.
that's
Now I'm
pretty,
scared
but
of you.
that's the sort of tech that's possible now. It's pretty crazy, right?
It is crazy, to be very, very honest. Okay, so let's talk about open banking APIs.
Sure. So this is one area that, you've seen a lot of growth in. Obviously, Europe is quite advanced in open banking. We haven't had lots of killer use cases for it as yet, but in terms of the legislation and connectivity of banks, it's quite well connected. And same for China. Much of Asia is getting on the open banking bandwagon. Dubai and Saudi are now sort of getting into that, and the US is, like everyone, every other area is sort of behind on this right now. But here's the thing, you can't do AI-based banking without open banking. So it's sort of a precursor to that. So yeah, we need open banking to allow that connectivity for AI-based agents for sure.
Okay, and before we started the pod, you told me about the fact that you have been to Nigeria before, my home country. I am proudly Nigerian. And of course, I'm so proud of Nigeria that I have my country's flag on my table all the time. I'm so proud of my country.
Shout out to
So,
my Nigerian brothers and sisters.
oh
Yeah,
wow, let me fly the flag real quick. Shout out to Nigeria and Nigerians. You have been to Nigeria and of course, advised the central bank.
Yep.
So the next question I want to ask you is about central bank digital currencies.
Well, can we take a step back first? Let me talk about the future of Nigeria.
Oh, interested. I like
Okay.
that. Let's go. Let's go.
So let's So Nigeria has the potential by 2070
Hmm.
to be one of the world's largest economies. I mean, I'm talking in the top 10, most certainly, maybe even in the top 5 economies in the world. It's certainly going to be the largest economy on the African continent. But Nigeria and, many of the African countries have a really interesting opportunity over the next 20 to 30 years, a greenfield opportunity when it comes to technology. So if you look at energy or telecommunications infrastructure, in the US and the UK, if you want to propose putting large scale advances in energy generation into these markets, you first have to convince the incumbents to do the investment or, to replace their aging infrastructure. You don't really have to do that in Africa because it's net new infrastructure, right? So as a result, you're seeing a lot of investment from China go into ports and highways and things like that in countries like Nigeria. And, it is the world's breadbasket, as they say, or the world's, source of nutrition and food for sure in the future,
Exactly.
where you have real food scarcity issues. But this requires this level of autonomous shipping and autonomous seaports and things like that, that we'll see. And so this is why the Belt and Road infrastructure is really critical. What would be interesting is if Nigeria joined the BRICS alliance, because by 2050, BRICS will account for about 50% of global output. So this is Brazil, Russia, India, and China. But it's really Brazil, India, and China, which are of course, the large economies driving that. India and China will be the number 1 and number 2 or number 3 economy in the world by the 2050s. US being either number 2 or number 3, depending on how badly Trump messes it up this time, I guess. But Nigeria has the potential to come in there and slot in the top 5 by the 2070s, because of the population growth that's occurring there and the economic growth that's occurring. But it has to be based on large scale infrastructure investment in AI based technologies and things like that. But I do see, if you're looking at investment opportunities from outside of Africa, then Africa has huge potential for growth compared with the US is going to see anemic growth over the next 20 years. China's growth is going to slow down because of their population crunch, and Europe has been sort of flat for small growth for a long time. You want big percentage growth, 5, 6, 8% GDP growth. You're going to be needing to look at Nigeria. But there's one flip side to that argument, which is in the 2050s, will we care about GDP at all in terms of GDP growth? There's a growing consensus that we'll have to be much more sustainable, and we'll be talking about degrowth economies in the future. So we'll be looking at not at aggressive GDP growth, but we'll be looking at resource optimization because of the problems that climate will bring to the way we operate governments and economies. So that's sort of the short answer.
Okay, but I really appreciate the whole analysis about the prospects of Nigeria, and you talked about the propensity for the growth of the current world leaders, so to speak, to slow down. But something about the population of Nigeria is the fact that we have a very, very young demographic.
Yeah.
We have a young population. Europe has an aging population. The United States has an aging population. India and has quite a young population, similar to what we have in Nigeria. And of course, India recently surpassed China as the world's most populated country.
Yep.
So we have India, we have China, number 2 now, and of course we have Nigeria somewhere around number 7 in the world, if my facts and stats are right.
Yes.
So given that trajectory of Nigeria with over 220 million people, that is a big opportunity.
What we know historically, this is why this is why Elon Musk says that contracting birth rates are a massive risk to society, population decline. Because the only way we know how to grow economies, think about the US economy, 70% of GDP is consumption. So if you have birth rate decline and you're not having immigration, then your middle class is going to decline and consumption is going to decline and GDP growth is going to slow or stop completely. So this is why when you have Nigeria projecting the birth rates that it does as a young population, and continuing decline, the replacement rate is good. You're going to see, and with the investment and technologies that come, you're going to see the Nigerian middle class become the hottest ticket on the planet, right? In terms of growth and consumption and things like that. And if things stay the same in terms of economic operation, then that would make Nigeria, of course, one of the most interesting economies from a growth perspective. But
That's a lot of potential.
do we want that sort of population growth that we've had? Is consumption going to be the way we think in the future? Or are we going to see consumption as sort of an ugly word because it produced all these throwaway goods and services? Look at the fashion industry right now. We throw so many clothes out to landfill, and think about, every time you replace your mobile phone every couple of years and the old one goes in the trash, and think about what that does to, our environment as well. So it may be in the 2050s that we push back against consumption and we look for much more sustainability in terms of products, and that people won't want to consume as much. That would require very different economic thinking from what we have today. But having said that, the population growth alone in Nigeria means that it's definitely going to be a heavyweight, economically in the future for sure.
I did talk about the massive potential for Nigeria, and I studied economics in a university that I consider the Harvard of Nigeria. It's called Obafemi Awolowo University, OAU. And one of my professors in economics, I think development economics class, I used to say something. He used to say the major problem of Nigeria is that we produce what we don't consume and we consume what we don't produce.
Yeah.
So consumption might look ugly driving into the future. How about the fact that Nigeria, given its young population, has that potential with the right infrastructure to become a production hub for the world? So what do you see as potentials in terms of not just the consumption side, but also the production side for the Nigerian economy looking into the future?
So if you want to check out my podcast, The Futurists, for your listeners, a couple of weeks ago, I interviewed Dave Shapiro. Dave Shapiro is a futurist out of the US, and he has come up with a concept called the meaning economy. And he basically argues in the 20s and 2060s, because of AI and climate and all of these things, and changes in the way we work, people's jobs will have to be meaning and purpose focused. And so what does that mean? Well, helping people adapt, to all of these changes that are going to happen in quite a quick period of time. Statutory requirements, we'll still need lawmakers and some sort of regulatory function, but that's going to be obviously AI assisted. And then the rest of the jobs tend to be meaning or passion or experience based. If you get a universal basic income, if you're paid by the government to live, because technology's displaced you from your job. And this is what Elon Musk and Mark Zuckerberg and all of these players talk about all the time now, UBI. What would you do with your universal basic income? Say you lived in the US and you get paid $3,000 a month by the US government, which comes from taxes on AI algorithms and robotic factories and so forth. Immense wealth created from that. So now the government gives you income to keep consuming, to keep renting and keep eating food and things like that. But in that environment, you don't have to work to put food on the table anymore because your universal basic income is enough for you to survive. But actually, if you move to Mexico, if you live in the States, will you move to, Vietnam or something like that, or to Africa where the cost of living is much lower, your $3,000 is going to be, take you a lot further. So I think that's one of the things we're going to see. We're going to see a lot more of people choosing experiences over, over culture or over things that they're used to, because, the UBI will give them that sort of freedom. So, the question for Nigeria in this instance is, what would Nigeria as an experience economy look like rather than as a producing economy, as you framed it? Is, yes, we still will have the production side of it, but theoretically that should be highly autonomous within 25 or 30 years, not requiring human workers. And so, it's not necessarily, if you talk about production in the way we typically talk about it in economics, it's about job creation. Well, that production element in Nigeria in 30 years is not necessarily going to be creating a lot more jobs than it is today, because the trick will be, for Nigeria to be a successful economy, it will need high levels of automation.
Uh, okay, and of course, high levels of automation are, or would I say, typically requires enabling environment, and an enabling environment requires a high level of infrastructure. But currently, we have an infrastructural deficit in Nigeria. So, what is the way to go in order to achieve that equilibrium between demand and supply?
Well, obviously we need to invest in infrastructure, so data centers, AI capable data centers, and things like that. But this is where it's really interesting. You can hear the discussion about mid-level coders being replaced with AI and things like that. So we used to say years ago, you'd be safe as long as you go into programming or coding in university. You'll have a job for life. Well, that's not the case anymore, right? We know that AI is going to be able to do a really good job at coding. Again, the universities and the schooling infrastructure in Nigeria needs to be integrating artificial intelligence into the curriculum at all aspects. This is where I get frustrated a little bit. You've seen, my son is in a school in Australia and he's banned from using ChatGPT as a 15-year-old student, and I think that's ridiculous. I think that's that's just crazy. So
I think that's a topic on which we could have like a whole podcast series on.
absolutely.
I am refusing the temptation to jump on that bandwagon. You
That's all
know,
right.
let's go back to the evolution of banking and fintech. You co-founded Moven, a mobile banking startup that pioneered real-time updates for debit card purchases. What problem were you trying to solve at the time, and how has Moven evolved since its inception?
So I haven't been involved in Moven for about 4 years now. I was able to exit myself in a deal that we did back in 2020 at the start of the pandemic. We sold off the banking business, and Moven is still running as a software business now. But uh, at the time, I thought it was fairly obvious that we would be digital first. 2010, when I registered the domain Moven Bank, and it's a contraction of move and bank, right? Move and bank. And then we just became Moven because the US regulators got very stressed about us using the name bank, even though we weren't a chartered bank, right? So we had to just call ourselves Moven. But we had 250,000 customers in 2013, and we were the first banking app where you could order a debit card in the app. And that was sort of 2 years before anyone else. And, we had a bunch of other design patterns that all of the major neobanks have sort of followed now. But, we were a little bit too early. That was our problem. But what was the problem we were trying to solve? We basically felt that your bank account should help you save money. And if you look at the core problem with banks today, particularly with credit cards, banks are designed today to help you spend money and use credit as much as possible, because that's the highest margin that banks get. So we were philosophically opposed to that position. And we said a bank should help you manage your money and save your money every day. So our tagline was spend, save, and live smarter. And that was sort of really describe what Moven was about. So for example, the app, when you use the app, the main page, when you first started the app and you went into the home screen, it had your balance at the top of the screen, but it had a spending meter, which showed you how much you were spending compared your average spend. And if you were spending more at this point of the month than you typically did, the entire screen of the app turned red. If you were spending less than you normally did, the entire app would turn green. So you'd immediately know at a glance whether you're being financially healthy or not. And then little things, we'd have nudges and things like this. We'd help you save money through behavioral nudges. We would have a real-time receipt. So when you tapped your phone or you swiped a card at the point of sale, you would get a receipt to your phone. Before the machine at the merchant was printing the paper receipt off, you'd have a receipt on your phone and it would say, hey, if you're in Starbucks, for example, or a restaurant, it would say, this is how much you spent on dining out already this month. And this would elicit behavioral changes because you'd see someone who's spent, I don't know, let's say $300 on dining out and it's the 10th day of the month. And they'd be like, I've already spent $300. That's crazy. Well, I'm not going to go out and eat for the next week. I better save some money. So that is what produced behavioral changes that help people save money. We had spending alerts. So when you had a spending spike, for example, we'd alert you. All of this stuff was just designed to change your money behavior and make you save money over the long term. I'm surprised that it's still, those sort of features are still not a big part of the design of even most of the neobanking apps. They think of financial wellness as sort of a function that can sort of be to the side.
Of course, the banks want to make the most money. They want to optimize profit, and of course, optimizing profit does not does not align with that philosophy. Somewhat, because they want to get the most of us. But your bank 2.0, 3.0, and 4.0 books have shaped the global conversation about banking's future. I think one of your books was actually quoted by the Chinese leader and highly, highly impressive.
Augmented Life in the Smart Lane. That's the book.
Yeah, augmented. So where do you see banking in the next decade? Will we completely move away from traditional banks?
Yeah. I mean, look, I guess most people don't probably realize this, but if you look at the top 20 fintechs in the world, and this includes players like Alipay, the mobile wallet schema, WeChat Pay, Nubank, the largest bank outside of Asia now, a WeBank in Shenzhen, etc. You take the top 20 fintechs in the world, they have about 4.1 billion customers between them. You take the top 20 incumbent retail banks in the world, they have 2.7 billion customers. So the reality is fintech has already won. And that differentiation is only going to get stronger. The only thing that banks really have left today is their asset size. But, as I say to boards of directors of banks today, when I'm speaking to the more central banks, I'm like, tell me exactly how is your asset size going to help you become AI capable? And the answer is it may not. It may actually be inverse to your ability to adapt. So what that means is that in 20 years, the AI-based banks that we use every day that are integrated into our architecture are most likely going to be technology companies that do banking and not traditional banks that have become tech players. I think there's, I would say maybe if you look at the top 100 banks in the world today, they may still exist in some form in 20 or 30 years, but all of the largest financial institutions in the world will be technology infrastructure in the future.
So that is a great way to segue into something I'm quite passionate about. That's cryptocurrencies, the rise of decentralized finance and cryptocurrencies has disrupted traditional banking models. So, do you believe DeFi will fully replace traditional banking, or is there room for coexistence? And of course, what's the place of cryptocurrencies in the future?
So when we talk about DeFi, we get a little bit confused here in the conversation, which let's maybe call it alt-fi is a better term, right? So TradFi and alt-fi. So with DeFi, we talk about decentralized finance,
Mm-hmm.
and largely the DeFi experiment has been a failure from a regulatory and security perspective. Just the size of the breaches we've had in cryptocurrency exchanges make it not fit for purpose for agentic AI with the sort of level of security and surety that we need for the banking system for money. You can't base your entire financial system on marketplace exchanges that are getting hacked and where assets are being exposed at the level that is happening in the DeFi industry. And decentralization is part of the problem with there because we don't have real self-sovereign identity infrastructure around the world that's robust enough. And, we don't have fraud protection in those DeFi systems that is good enough as yet. Now, that doesn't mean we can't get to that, but the biggest part of DeFi that is going to be transformative for the banking industry is what we call smart contracts. So you will not be in the banking industry in the future unless you support smart contract deployment. So this is the biggest thing we'll take away from DeFi, but we're going to have a much more centralization required for smart contracts to operate for cross-border trade and things like that, as we will be using CBDCs and stable coins and, and so forth on that. Where we're not likely to see DeFi take over is in the wallet itself. We are going to see much more wallet regulation requiring more centralized approaches because wallets are going to be more than value stores for money. They're going to store your health data and other personal data. When you have a personalized AI, it's probably going to use your data wallet to take behavioral data from that for training. So you can't have that decentralized. You can have a self-sovereign component to that in terms of that, but the decentralized mechanism really isn't going to work at scale for safety in terms of and security in terms of your financial assets and your health data and so forth. So the answer is a bit of both. That DeFi is certainly what we've learned on smart contracting is going to transform the way banks operate with agentic AI, but you need centralized regulation when it comes to identity, particularly as we start to have machines acting on our behalf. How do you know that an AI is who it represents itself to be? And do you know if an AI is doing this transaction or a human? We're going to need to know that, and that requires a form of identity infrastructure that is not possible with the decentralized approach that we have today. So the answer is a bit of both. What I will say is that a bank in 30 years' time, there will be nothing when we identify a bank in 30 years' time, there will be nothing about that bank that looks like banks that we had in the 1990s. A bank in 2050 will be so different from what a bank was like in the year 2000 that it will be unrecognizable. So the very word banking, in 20 or 30 years is going to be a very different concept from what we've traditionally held.
And of course, I think we are actually on the road there. I know you are a very busy man, and of course, you shared your time here with us today. But I think there's still a lot of questions that I would love to ask you, and I'm going to put you on the spot to commit to have another session or part two. We need to have a part two because there is so much, wealth of wisdom, knowledge that you have to share with us. And of course, I'm really, really grateful for your time today. But of course, before I let you go, I think I would like to chip in a question about an area of the world that I'm very passionate about. I am African true and true. And speaking of sub-Saharan Africa, there is a stat that says there's been 33% rise in mobile money accounts. And of course, there's still over 80% of the world's 1.4 billion unbanked adults
are in sub-Saharan Africa.
Yeah,
Correct.
that they reside in these areas, and of course,
No, but I think the point is that the greatest tool ever for financial inclusion is the mobile phone. right? We had 2.7 billion people come into the financial system for the first time since 2011, and that
Mm,
wasn't because of branches. You know, there was a study I referred to, it's 9 years old now, but back in 2016, Standard Bank and Accenture did a study to look at how to mobilize sub-Saharan Africa to get them bank accounts. And what they worked out is that 90% of the unbanked in sub-Saharan Africa would have to pay an entire month's salary just to physically get to a bank branch. So
mm,
the translation is bank branches will never create financial inclusion in sub-Saharan Africa. It has to be technology based. So we need to fix two problems. You need to give everyone a mobile phone and you need to give them access to the internet. So digital inclusion is actually the bigger problem right now. You know, how do we get, solar trees, with satellite dishes into Nigerian villages so, that we can turn on internet access at that local point and give people the ability to charge their phones and so forth. We can make phones effectively almost free and internet almost free over the next few years, but that sort of distributed architecture needs to be in place. So satellite is one, but satellite to a hub, the concept we're working on, we're trying to get investment for this right now, is essentially a metal tree-like structure with solar panels on the top. They're the leaves, and that generates the power. You have a Starlink satellite dish or similar, which interfaces to the backbone for the internet, and then you have a picocell, which allows you to transmit, make calls, and things like that within, say a couple of kilometer radius of that. And we can produce those for very cheap, $5,000 to $7,000 at scale, and put them in villages and turn that on. So that's how we could fix the digital inclusion problem. Another approach is mesh networking, where you can tie devices together. So your device becomes a receiver and transmitter of the internet for others. But in, that sort of decentralized internet capabilities require sort of a different approach to the commercial play for telecoms infrastructure. But we're getting to that point where internet should be free for sub-Saharan Africans. And I think that's what we would seek by, I think, the early 2030s. That's certainly going to be possible. The other thing is, if you start thinking about how people will operate in the future, no one's going to use cash. No one's going to use plastic cards in the future because, it's all just going to be done with agentic AI.
Well, thank you very much for your time today. I am very grateful to have you on the show. And of course, I'm looking forward to speaking with you again. And of course, to our audience, if you've actually stayed till now, please support the cause, like, share, do everything you can do to support the show. Thank you very much. Love and respect.